let me save you hours of stress trying to figure out what is going to be happening today in the forex market. If you give me 5 minutes of your time, we'll break down the dollar index, and from there we'll pick out possible moves that we can envision today, being 13th May 2026 on DXY. Remember, we look at DXY with the aim and the understanding to have an idea of what is happening in the major market pairs we have in the forex market. Before we drive down and pick out the directional bias for today, we will kick off by first of all doing a small recap from the previous day analysis, which was yesterday. Okay, so what you're currently looking at on the screen there is the dollar index. We are currently on the 5-minute time frame. All right, so I'm going to hide this guy. We'll do the recap, then we will go straight to our expectations and the plan for today. For the guys that pretty much has been following me, you guys already know what's up. But for the guys that may be coming across my channel or video for the first time, we made a call yesterday that DXY was going to buy, and of course this is yesterday's market, and you can see throughout the whole morning till the end of yesterday, market has been buying, and that is that move there. Okay, I will make this guy a green so that it can stand out. Oh, sorry, I didn't. How do you do this? I've forgotten how to do. Okay, yeah, this is it here. Alright, so you can see that up move there. That's the buy. Okay, so coming in today's price action, there are two things that I envision. Remember, I told you guys that the draw on liquidity that prompted us to expect a buy into that gap is a Wednesday gap that came from last week, and I said that after price taps into that gap, only then we would expect something different to happen in the market. So right now price has tapped into the gap, and the plan here would be for us to use the previous day approach to get something out of the market. Remember, there are so many strategies out there, but today we will be applying the previous day high and low as the context in today's speculation. If you don't know how to work with the previous day high and low, of course today is your lucky day because you will learn it. The previous day high, if we are to point out, so I think this gap has already done its work, so I'm going to remove these two. The bottom guy is the opening week gap, which was dropped on the Monday. You can see it here. It's already filled, so we don't need this guy anymore, and also that of the Wednesday is already filled, so we don't need that anymore. Now we have an empty chart. Okay, so we have to first of all get the previous day high and low. I know for the guys that might be wondering, how is it easy for me to pinpoint the previous day high and low? Well, all you need to do is, if you go to your trading view to get the previous day high and low, apart from the tools that is provided in the indicator section, there's an indicator for previous day high and low. But what I basically did, if you go to the settings, if you pay attention, you see there is a dashed vertical lines you see on the screen, right? So those dashed vertical lines are for the previous days. All right, so yesterday is from here to here. Where is this? Yesterday starts from here to here. Okay, then the day after that also, of course, starts from here to here. So it makes sense how I'm able to see the previous day high without more stress, because I've already broken down the chart to give me a line that demarcates each day. So in order to get that, all you need to do is go to your settings. If you go to the settings icon at the bottom of your trading view chart, whether you're using mobile or desktop, if you go there, you click on it, you will see more settings, right? When you click on more settings, you go to event. If you go to events, turn on section breaks. If I turn it off now, you see it goes. So if you turn it on, it shows you the section break by calibrating each starting day and the ending day. So with that, I can easily look at it, and I can easily see this is the high of the previous day. Okay, this is the high of the previous day, and of course this is the bottom of the previous day. So what is the plan here? The plan here is to do the traditional previous day high swipe or previous day low swipe, depending. All right, and that is how most institutional traders, go about their thing. So the plan here will be for us to see price to either take out the high. All right, that's the most closest move and the most ideal move here, or price can pretty much start coming back down to swipe the previous day low. That is the first step. Mind you, while price is doing this, we are not going to be participating in anything. We're only interested at the point when price swipes the low or when price swipes the high. That's the plan for today, okay? And I'm of the opinion that price would want to swipe the high because that's the closest to the current price action, okay? But remember, I said it can go either way. So if it goes down, wait for it to swipe the previous day low. If it starts going up, wait for it to swipe the previous day high. As it stands now, we are not making any decision whatsoever. All right, but let's work with the context that price goes high, which of course the mechanism we would apply here is still going to be the same, assuming price swipes the low. Just follow me and don't get it twisted. All right, so if price swipes the high first, that would be good. So what we are now looking for after that swipe is for price to show us some level of market structure change. All right, so if you pay attention to this pattern that I drew here, you see price came up, got rejected, came up again, and drop something like a double top, then immediately they start swiping previous lows, thereby causing a market structure that, okay, this uptrend is now turning to a downtrend. What we'll now do is we'll be aiming to grab an entry once price changes character from an uptrend to a downtrend, and of course once that happens, we'll be looking at something like this. So we assume this might be the breakout. We'll be assuming something of this nature. All right, that is if price swipes up first and gives us that reversal setup. So this is plan A. The plan B will be, like I made mention of, is price decides to just not go up, thereby coming back down. Once they start swiping this low, we are just basically doing the same thing we did for this, but vice versa. So what do I mean? I'm going to remove this drawing, okay, and I'll continue this pattern. So we assume that price has traded down, okay. All we need for them to do is show us some market structure change, which might be something like this, okay. Comes down, get rejected up, comes down again, swipe liquidity, and once liquidity is taken, we'll wait for that market structure change, of which once we see the market structure change, we'll be entering for a buy, and of course our stop loss will be the last low that price used in causing the market structure change, and of course we'll be aiming for our TP to the previous day high. That is if we are coming from the downside. But if we're coming from the upside, then we'll be aiming for the low for our TP. All right, mind you, all of this is subjective. So while you are even entering this position, you are going to fall into two categories. All right, on the bigger time frame, you are going to fall into two categories. It's either you fall into the retail traders that are currently trying to trade the pullback on the higher time frame, or you might be part of the retail traders that is actually in the bigger time frame current trend. But either ways, this is the plan for today. All right, I'll see you guys in my next video, and I hope you guys enjoy the content we do here every day. We do this kind of call every day. Unfortunately, I said if you give me 5 minutes, but it took 10 minutes. I'm sorry about that, but we gotta go. See you guys in my next video. For now, bye bye, stay safe and be careful out there. Happy trading, guys. Thank you. Bye bye for now.